Welcome to the Daily Market Recap. Today is Wednesday, August 12th, 2026. And wow, what a lively session on Wall Street today. The bulls strapped on their rocket boots and pushed stocks back toward historic highs. The main catalyst driving the party, a cooler than expected inflation report that gave investors a massive sigh of relief, paired with robust forward-looking earnings from major tech players. Wall Street always loves a good rate cut narrative, and today was no exception as dip buyers stormed back into equity markets with serious confidence. Taking a peek under the hood at sector performance, technology and consumer discretionary absolutely stole the spotlight. Charging ahead as semiconductor and hardware names caught fire. Industrials and small caps also had a fantastic run, benefiting directly from easing treasury yields across the board. On the flip side, defensive sectors like utilities and consumer staples took a mild backseat as capital rotated back into high beta growth assets. Checking in on market sentiment, the CNN Fear and Greed Index sits comfortably at a reading of 62. That puts us squarely in greed territory. Investors are definitely feeling upbeat, but we haven't crossed into extreme euphoria just yet, giving this rally plenty of room to breathe without looking dangerously overheated. Our top story today centers on the latest consumer price index figures. Inflation came in lighter than expected, easing fears that sticky prices would force the Federal Reserve to keep interest rates elevated for longer. Benchmark 10-year Treasury yields tumbled immediately following the release, sending a clear green light across stock trading desks. Analysts are now pricing in a significantly higher probability of Fed policy easing before the end of the year, which historically serves as potent rocket fuel for equity markets. Next up, the artificial intelligence megatrend continues to prove it's far more than hype. A wave of hardware and enterprise technology companies delivered stunning spring earnings reports that blew past Wall Street consensus estimates. Big tech executives emphasized that enterprise spending on AI infrastructure isn't slowing down, it's actually accelerating into the second half of the year. That commentary sparked a sector-wide rally, pulling chips, cloud providers, and data center suppliers along for the ride. Rounding out our top news, crude oil prices stabilized after recent volatility, helping lower input cost anxieties for transport and manufacturing companies. Easing geopolitical friction around critical shipping corridors helped calm supply disruption fears. Lower energy prices act like an unannounced tax cut for consumers, adding another solid layer of macroeconomic support to today's risk-on market environment. Now, let's dive into today's absolute wildest movers, the stocks that made massive splashes on the leaderboard. Starting with the champions of the day, Nebius Group, NBIS, blasted off with massive volume following an upgraded analyst rating and stellar revenue guidance. QuantScat QNT surged as buyers piled into quantum computing plays following a breakthrough partnership announcement. CarWave, CRWV, sped higher after reporting blowout quarterly profit margins. And Supermicro, SMCI, erupted once again, riding the massive wave of AI server demand as institutional investors doubled down on data center hardware. On the flip side, every market day has its casualties. Mass Aviation sank hard following a disappointing earnings release and a trimmed full-year outlook. Fervo Energy, FRVO, got slammed as traders took aggressive profits after recent high valuations. Liquidia Technologies, LQDA, took a dive after regulatory delays cast a shadow on its drug pipeline timeline. Finally, Almarai ALMR tumbled after missing top-line revenue estimates, proving that Wall Street is showing zero mercy for missed guidance. Turning over to the technical charts, the SPY continues to display robust bullish market structure. After today's strong green session, SPY is holding firmly above its key support zone at $770, which aligns nicely with its short-term moving average. Overhead resistance sits right around the $778 to $780 all-time high level. As long as SPY stays above $770, the path of least resistance remains firmly tilted to the upside. Looking at the tech-heavy QQ, momentum is roaring back with authority. QQQ bounced cleanly off its $648 support level and is now testing heavy overhead resistance near $665. A decisive breakout above $665 could unlock a fast run toward new psychological records. On the downside, $640 serves as the primary line of defense for the bulls. And small caps are making some serious noise. IWM gained strong ground today, breaking past minor resistance at $300 and eyeing the next key target at $310. Downside support rests solidly at $295. Strong breadth in small cap stocks is a fantastic health check for the broader market rally. Shifting gears to digital assets, Bitcoin held relatively steady near $63,500 today, consolidating nicely following the macroeconomic inflation news. BTC is holding strong above its critical support band at $62,000. To trigger the next aggressive leg higher, Bitcoin bulls need to push past major overhead resistance at $65,000. Ethereum followed suit, trading right around the $1,885 mark. ETH has formed a solid local floor around $1,850, while the immediate resistance target stands at $1,950. A breakout above $2,000 would signal a definitive trend reversal back toward multi-month highs. Across the broader altcoin market, overall performance remained mixed with a light consolidation tone as total crypto market cap hovered around $2.26 trillion. Selected AI narrative tokens saw pumps, but capital generally remains cautious ahead of upcoming macro catalysts. As we wrap up today's recap, overall market sentiment remains decidedly bullish, buoyed by moderating inflation and resilient corporate earnings. Looking ahead to tomorrow, traders will be closely watching initial jobless claims and wholesale PPI figures for further clues on Fed policy. Keep your risk management tight and stay disciplined. If you enjoyed this market breakdown and want to stay ahead of Wall Street every single day, hit that like button, smash subscribe, and ring the notification bell. Drop a comment below with your top stock pick for tomorrow. Thanks for watching, and see you next time.